All right, everybody, let's talk about taxes. Okay, what are taxes and why do I have to pay them? The federal government uses taxes to pay its bills and to provide public goods and services. So you might be thinking, what's a public good and what's a public service? Well, there are a lot of public goods and services. For example, highways are public good. Nobody wants to just go out and pay for the highway by themselves, so taxes pay for stuff like that. My job, yes, I am paid by the government because people don't pay to send their child to school. Like you don't pay a certain amount of money for however many kids you have in school. It is based off of property taxes. So there's a lot of different things that taxes pay for. The Internal Revenue Service, or IRS, collects the taxes you owe through withholding from your paycheck, estimated tax payments, and when you file your taxes each year. So let's talk about what all those things mean. Income tax. Income tax are required contributions to state and federal revenue. That's like state and federal like money pots based on income. FICA tax. That is Federal Insurance Contributions Act. Money from your paycheck that pays for Social Security, which you've probably heard of, but you might not know what it is, and Medicare. Okay, so income tax, it's money that's paid to go into the state funds or to federal funds. But that FICA tax, FICA tax, that's money that is put into, essentially it's supposed to be put into a pot and it pays for Social Security, which is like almost like a paycheck for the elderly. When you work, you retire, you're allowed to collect money from Social Security. And so let's say, for example, use Mr. Bodily. When Mr. Bodily turns, oh gosh, he would know this better than me. When he turns like 65, I think it is, he can start collecting Social Security. And that's because he's always had Social Security taken out of his paycheck. So then he gets to start collecting that money back. So it's like the government's sort of forcing you to save for retirement. Now, there's a lot of criticism on Social Security because some of that money has been poorly spent throughout the years by just the national government. And so there's this big fear that there's not going to be any Social Security left. I won't get political here, just letting you know that that's an argument out there. Medicare, that is healthcare for our elderly who are not working and cannot get healthcare through a job. Okay, so who pays taxes? Just sliding this over. Everyone. Everyone who makes money owes taxes. There's a difference between the word owes and pays. If you make money, you are legally required to file your taxes and see how much you need to pay the government. So how does that work? Well, we are going to watch a little YouTube video about the United States marginal tax system because there's a lot of
these are tax brackets.
There's a lot of misconceptions about taxes sometimes. So watch this video and let's see what you can figure out. Hopefully I stay in the corner here.
Okay. For 2019. Simple, right? But many of us make a common mistake when looking at this. Let's say my income is $84,000. You might think that puts me in the third bracket, so I would owe the federal government 22% of my income. This is wrong, and it's causing us to have uninformed debates about tax policy. Here's how it actually works. Let's go back to my $84,000 income. Now, instead of thinking of tax rates as brackets, we should think of them as pockets. But first, there's one special pocket we need to talk about. The money we put in this pocket is not taxed. The government automatically lets single people put $12,000 in this special pocket, and more for couples. But if you spend a lot of money on things like medical expenses or charitable donations, you can sometimes put in more. These are called deductions. With the $70,000 that's left over, we can start filling up the pockets. The first pocket only has room for $9,700, so I only pay 10% on this money. Then I pay 12% on the money in the next pocket.
You shouldn't cut money.
And then 22% on the money in this pocket. These are called marginal tax rates, and that's how these brackets actually work. So if I get a raise that new money goes into the first pocket with empty space. When space runs out, we put it in the next pocket. So the raise, and only the raise, would be partially taxed at 22% and partially at 24%. So when politicians say they want to raise the top tax rate, it doesn't necessarily mean these pockets and their money are affected. They're talking about tax rates on the pockets way over there, which are only used once people have filled in these smaller ones. Marginal tax rates are a pretty simple concept once you get the hang of it. So the next time a politician says the government wants to take away 70% of your income, just send them this video.
Okay. So let's talk about what that means. So the marginal tax system. It means that you don't get taxed on a whole percentage of your income. So when your income up to $9,700, from $0 to $9,700, that is taxed at 10%. After that tax, $9,700 to $39,475 is at 12% taxed. And by the way, these were 2019 numbers that I used. Okay, then the next goes up to $84,200, 24% tax on up to $160,725. And the next few, this one goes up to $204,000, this one to about $510,000, and then over $510,000. So what he was saying there was, if you get a raise and that raise puts you up into like $100,000, you don't get all of your money taxed at 24%. Some people, I've heard people say, I would have been better off without my raise because taxes killed me on it. Well, you only get taxed marginally based on where that raise fell in those pockets. So I hope that that video made sense there. Taxes are not a blanket number, and the reason we do that is because we're trying to help people who are down here. People who are only making $39,000 a year, they have less tax responsibility because they have a lot less money. Whereas, like, let's say there was a single person making $39,000 per year and another single person making $160,000 per year. It's easier to live life with $160,000 than it is with $39,000 financially. So there's a bigger tax on those higher parts of your numbers. Again, I don't want to get too crazy about the political side of this, but I do want you to be understanding about how this works so that you're never misinformed about when your taxes are being paid. Okay, so how do people save money on taxes? He talked about that very briefly at the beginning of the video, and we'll talk about it a little bit more here. Deductions and credits, they offset how much you owe. So deductions and credits kind of make it look like you make less money. So there are a couple different ways that you can save money on your taxes. The standard deduction is what the government will let you choose if you want to say, take this much less off of my income. Okay, so the standard deduction, the total dollar amount determined by the government that you can subtract from your income before income tax. And in 2019, it was $12,200 for a single person. And we're just gonna talk about single. If you are married, it changes these numbers and you can always look those up. But none of you are married, so you don't have to worry about that. Retirement contributions are another way that you can lower your income before they take out income taxes. So retirement contributions, that's money that you put into retirement from your paycheck, and it lowers how much money you owe in taxes. The maximum, I think I forgot a zero on there. The maximum that you were allowed to take out for 2019 was $19,000 for retirement. Charitable contributions, that's money that you donate to charity, and it can lower your taxable income. And then I put in here when itemizing, that's when you're not taking the standard deduction. And that's more information you can look more into as you start to study taxes a little bit more. Health savings and flex spending contributions. That is like a way that you could save your money for medical expenses. So they are tax advantaged savings for healthcare expenses. So if you decided that you wanted to take, I don't know, $100 a month and put it into one of these accounts, for health savings or flex savings, you could only spend it on medical stuff, but then it looks like you get paid less, which means you pay less in taxes, which is an advantage. That's why you're saving money on taxes. Okay, child tax credit. Hopefully you don't have to deal with this after graduation because children are awesome, but they cost a lot of money. But a child tax credit helps make up for a little bit of that money that they cost. So it lowers your taxable income by $2,000 per child, and that was in 2019. And then lastly, education credits, which will apply to you while you're in college or vocational training. That lowers your taxable income by up to $2,000 of the cost of tuition, books, etc., and other things that are college related. It doesn't count for room, like for housing, but you can pay for school expenses with that. So if you were to buy, if you were to get to college and you bought books and you had tuition and maybe you need to buy a laptop, that could all be tax credit. You could deduct that all from taxes if you keep proper receipts, which is very important for those things. Otherwise, you could get audited, which means that they come and look at everything you spent and see if you lied to them, the IRS. Okay, ask questions if you got some on this. I'll try to answer what I've got. You can always try asking your parents or looking some of this stuff up as well. Let's go to page 4. What are withholdings and why do they matter? So there's a website that I linked over here. It's called the IRS Withholding Calculator. The IRS, like we said at the beginning, is the Internal Revenue Service. And they put out a calculator every year, and they update it every year, where you can fill in this information. And it says things like, what filing status do you use on your tax form? So let's pretend like we are single. Perfect. Can someone else claim you as a dependent? That would be like if you live with someone over half of the year, or if they pay for over half of your expenses, then they can claim you. But we are going to remember that you do not live with your parents in this scenario. So no one else can claim you. Do you plan to claim dependents on your tax return? That means, do you have kids that you are taking care of? No, we are not going to say that for this one. Do you or will you hold a job this year with paychecks from which the federal income tax is regularly withheld? Yes, I will. How many jobs do you expect to hold this year? 1. Will you receive income from a pension? That means like retirement. No, I will not. Check all that apply to you. Do I receive Social Security? That means, am I old and collect money from the government for being old? No. Do you receive a scholarship or grant that must be counted as income? We're going to go with no, just because I'm doing an example right now. I'm not going to collect unemployment this year. Earn net income from self-employment. I don't even know what that means. I'm just going to keep reading. I don't think we're going to click any of these. We're not 65 or older, and none of you are blind. Okay, do you expect to hold this job the entire year? We'll go with yes here. How frequently are you paid? Remember, we are going to say once a month. On what date did your most recent pay period end? I don't know. I actually don't know how this is going to do this for us. This is the first time I'm going through this year. Enter the total wages you expect to receive this year. So I'm going to go back to the amount that we chose to on the other days. What was it? We said that a bachelor's degree was $2,923 times 12 months in the year. So I'm going to say that the wages would have been $35,076. Okay, we're going to go with no bonuses. No bonuses. Use your last payment, enter federal income taxes withheld. Oh boy. Anyway, there's a lot more questions that they have this year than they did last year. But you would go through these questions, and at the very end, let's see. I'm just going to put in zeros for these. No, let's go with no. And take the standard deduction. We'll do it without tax credits. I just want to show you that it is saying, oh, you're going to owe money, and you're expected to undersave by $2,524. So it says, adjust your results to avoid owing money. So they would tell you how to change these numbers on your, what they call a W-2. Whenever you get a job, they make you fill out a W-2. So this is actually a really helpful thing to help you figure out what numbers to claim on your W-2 when you get hired at a new job. So how often do you need to check that? Every year or every time you get a raise. The reason every year is because tax laws change every year. Every time you get a raise, it's because you just might have jumped into a new pocket of tax owing. Every time you change jobs, you change probably your income. And every time your family changes, you change things like your child tax credit. So if you were to have a kid, then your family is changing and you might owe less in taxes. So it's important to know. All right, that is everything I wanted to talk about with taxes. Again, you're welcome to ask questions if you've got them. But I would like to now talk about month 2 on the unexpected expenses. So if you're doing the extra credit, you're gonna wanna follow along for this. Choose 2 numbers between 1 and 5. Now, last time I chose 2 and 3 and they were horrible. So let's go with 2 and 3 again. Because like they can't be bad twice in a row, right? So anybody who chose number 1, you got a speeding ticket. You pay $175. Woo! Glad I didn't pick that one. You might have to take that out of, I don't know if you've got the money in car repairs, that would probably be a place. Chipped tooth. Ooh, that's us too. But I do have money in my health section. So $75 for the dentist. Sibling's birthday, spend $30 for a gift. 2 and 3 sucked this time. So $30 to buy a gift for a sibling. Mileage reimbursement for work. Yeah. Anybody chose 4? You got a $45 check. You are essentially rolling in the green. Ant infestation. That's disgusting. You would spend $40 for ant murdering supplies. Okay, so figure out which ones you have to pay for. I have to do the chipped tooth and a sibling's birthday. So let me show you how to do month 2 of your budget. Remember, we had $2,923 to spend. $2,923 to spend. And I can go back to month 1 and I can see what all I chose. I know I had $570 for rent. I know that I had $74, $60, $126. So $74, $60, $126. I had $77 and $60. And I'll talk about some of these leftover categories in a second, but first I'm going to put in everything I have to pay for. Groceries were $240. Gasoline, $75, then $50, then $100 for me. $75, $50, and $100. Clothing was $50, $35, $75 for the next 3. Month 1, I had $50 for medical expenses and $292.3. And then my student loans I had to pay were $300. Car payment was $216. And remember that $472.7. Okay, so what about that money from last month? That stuff gets added over. Now, was it likely for me to not spend my blow money or my fun money? No. So I'm gonna say I spent $75 and I had $25 left over. And last month, let's say I did not buy any clothes, yay, and I have $50 left over. Remember, I had to pay for that thing, so I took it out of haircuts. Car repairs, let's say I had none last month, so I've got $75 still. Medical, I had none last month. Okay, so I can take this fun money and I get to add it to the next month because it was left over. So now instead of having $100 in my ending, I have to put 125 because, and I know that's going negative, that's because, actually I'm trying to think, is there a better way to do that? If you, yeah, I think the best way is to just, maybe if we go to the end here, I think you're gonna have to just go. Let's see. Let's say 125. I know it says negative there. I just made a really bad program in Sheets apparently. That's okay. Life goes on. Okay, there's $50 left last month from clothing. That means that I started this month not with 50 that I added, it's with 50 from last month plus this month's 50. So I actually have $100 that I can spend on clothes. Now, did I have anything left over for haircuts last month? Yes, $10. So I have all of last month's $10 plus this month's $35. So I really have 45 to start with. Car repairs, remember I didn't spend anything on car repairs last month, so I had 75 left over, plus the 75 from this month, and that is $150 in car repairs. So those of you who had the speeding ticket, you could take out some of the car repairs and you'd still need to take some more out of maybe savings. For medical expenses, I didn't spend any of it last month, so I had $50, plus the $50 this month is $100. I can do math in my head. And then I already spent all of that, my student loans I had to spend. But remember, I had $347, I can't do this math in my head, $347.70 left over at the end of last month, plus the $472.70 for this month. Look at how much I have in savings, $820.40. So I'm gonna put that here, $820.40. Now, if you're feeling confused on this part, don't let this be like the thing that hangs you up, but I do want you to understand that doesn't mean that I budgeted over. It means that my leftover from last month was all that. I carried over that much money and I'm saving up for bigger expenses. So I already forgot what I had to make work. Chipped tooth, yay, $75. So I go to my health medical, and I'm gonna put $75 there. So I've only got $25 left in medical, but remember, that's an unexpected expense. Sibling's birthday, yay. Where should I take my sibling's birthday gift from? I don't think I can qualify that as clothing. I'm gonna have to take it out of my fun money. Ms. Bly better enjoy that gift. Okay, I think I covered everything. This one is not working correctly. It should have been equals this minus this. I think I deleted that one on accident. Anyway, we got 95 left in our fun money. And you'd keep going from there. All right, so this is my ending balances after month 2. Okay, so we'll follow up next with our next lesson.